Hello and welcome to the webinar titled How to Future-Proof Digital Lending Using Emerging Technologies. This is jointly presented by Forrester, a leading technology and market research company, and Newgen Software, a leading provider of process automation, content services, and customer engagement platform with a multitude of implementations across the globe. I'm Richika Srivastava and I shall be your host and coordinator of this webinar today. Our speakers today are Ms. Zhi-Ying Barry, Senior Analyst, Forrester, followed by Mr. Jayant Tandon, Head of Center of Excellence from Newgen Software. Ms. Barry works closely with digital executives at major banks, insurers, wealth management firms, and superannuation firms in Asia Pacific. Her research focuses on the business and customer value that digital technologies bring. Mr. Tandon has 22 years of rich experience comprising of banking operations, digital transformation, product management in a highly fragmented IT landscapes for banks and non-banking financial organizations across regions with the focus on Australian market. At the end of their presentations, we will be having a question answer round. So I shall request you all to kindly put in your questions in the GoToWebinar question window. So now, and I shall be taking that up after the whole session is done. So now it is over to you, Zhi.
Thank you, Richika. Hi, everyone. My name is Zhi-Ying Barry, and I'm a senior analyst here at Forrester. Today, I'll be talking about a topic that is very top of mind for many of the banking executives whom I work with and I serve, and that is how can they reinvent lending? And COVID has really brought about tremendous change and challenges to the banking sector, and it has impacted lending significantly. So here's the agenda I have for you today. First, I'll talk about how COVID-19 has impacted lending. Then I'll discuss how lenders are responding to some of the changes that COVID-19 has brought about to the banking sector. I'll also introduce a framework to help you guide your transformation efforts. And as part of that, bring in some of the best practices that we see across the globe of what lenders are doing in the lending space. Finally, as you go on your transformation journey, I will leave you with a number of key takeaways and to also let you know what are some of the changes that you have to embrace in order for you to succeed. So firstly, how has COVID impacted lending? I think it's very hard for us to just talk about lending specifically without looking at the broader impact of COVID on the banking sector. So let's look at what the impact is on the banking sector, and I'll also share with you what Forrester is predicting for 2021. The impact of COVID-19 on the banking sector, what's clear from the pandemic is that COVID-19 has brought about uncertainty and reduced profitability to the banking sector. In 2021, we'll see further consolidation and much lower appetites for risk when it comes to the banks that we look at. Many banks, either traditional or digital, they were either bite the dust or emerge from the pandemic both poorer and leaner. Globally, we're already seeing the negative impact of the pandemic on the retail banking sector. Transaction volumes have collapsed in major economies, and major US banks' profits plunged in Q4 of 2020. For instance, Citigroup reported a 42% fourth quarter profit decline, and Wells Fargo saw a 39% drop. We have also seen that happening across Asia Pacific and across the banks in this region. Sumitomo Mitsui Financial Group, for instance, saw a 60.1% year-on-year decline, and they have also seen credit losses triple due to COVID-19. The pandemic will result in a shift in priorities, both business and technology priorities, where lending and risk management will really dominate these banks' priorities. We've already seen that happening as well. big US banks, they have set aside more than $65 billion worth of money in order for loan losses. They expect the loan losses to balloon in time to come. And 2021 will actually be the year of the model. And this is where lenders will use data analytics, AI, as well as machine learning models in order to minimize up to $400 billion worth of risk. And that's what Forrester is predicting. 2021 will also reveal the high number of fraudulent COVID-19 loans. While governments have always been responsible and they have always been underwriting these loans, these fraudulent loans will actually tarnish the bank's reputations because they are now playing their role and taking part in underwriting some of these government loans. And banks will actually face breaches and fines as a result of naive businesses that have digitized with scant regard of GDPR, of AML or KYC processes, exposing a lot of the data and compromising millions of accounts. So banks need to keep their fraud management up to date and adopt a lot more machine learning based solution to combat fraud in real time. And we'll see this uncertainty going into as we go into 2021 in the months ahead. And there will still be that level of not knowing what's going to happen. And I share with you a quote from Jamie Dimon, who is the CEO of JP Morgan. And this is what he said in 2020. He said that you have a cloudy next 2 quarters where there will be mixed economic information with almost 44,000 people dying per day. And the drivers for lending transformation, they are quite compelling. Firstly, with consumers, they have become a lot more digitally empowered. We've seen that shift happen so quickly, especially with the age group of those who are 50 years old and below and above. They have become so digitally empowered where they want simplicity, they want convenience, they want a lot of value from the financial services providers whom they interact with. And from a lending point of view, they expect to be able to interact with their lenders in a digital manner. So for instance, if we look at Australian online adults, 58% of them, or close to 60% of Australian online adults, they expect their lenders to have a mobile app. And 53% said that they would consider getting a loan from a non-bank or a digital-only lender because of the much better digital experiences that they provide. The same percentage, 53% of them, also will choose a consumer loan provider because of less complex applications or the ability to upload digital documents. And it's not just retail consumers. Businesses have also made the shift. Businesses or firms of all sizes during the lockdown demand their financial services providers to be more digital. Many of them prefer to manage their finances using websites or apps, and they also said that excellent digital tools are very important to them. Globally, we've also seen how regulations have been quite conducive to the growth of lending, regulations as well as the broader macroeconomic environment. The record low interest rates in many different countries and major economies has really driven the demand for credit and driven the demand for loans, especially when it comes to first-time home loan borrowers, as well as the investment-only or the refinance market. COVID-19 has also challenged how lenders identify, assess, manage, and mitigate risks. So gone were the days where lenders are able to see the past historical financial documents, whether it's an individual borrower's past 6 to 12 months of pay slips, or a small business or a corporate institution's 10-year financial statement. These are not great indicators of current risk and future risk. What they need today is to be able to gather that data in real time, to be able to assess that risk in real time, and to predict the future probability of any sort of default. So there is now a huge focus on being able to assess creditworthiness in current times, as well as to predict what's going to happen in the future. The competitive landscape for lenders has also changed dramatically. There are now new digital players, not just fintech startups, but also tech giants, e-commerce companies, as well as some of the accounting software providers really coming into the lending space very aggressively. We have seen the tie-up of Goldman Sachs and Amazon in the US, and in Australia, digital startups or digital-only loan providers such as Athena originated $2 billion worth of loans since they started their business here in Australia. So there's tremendous competition in the lending space. So we've looked at some of the drivers for lending transformation. What is the current state of transformation today? And what are lenders, your peers and your competitors doing to transform lending? So what we've seen is that many lenders, they begin with transforming origination as well as onboarding. And this is because when COVID hit, many governments across the globe, they have launched their own stimulus or support packages to consumers as well as to businesses that are struggling in order to help them get through these hard times. But the challenge was that many of these lenders, they don't have a digital portal for these applicants, borrowers to apply for these loans digitally. And lenders had to really scramble, whether it's to build, APIs or microservices to connect some of these digital portals for their applicants to use, or to use some of these low-code platforms to launch apps in a very quick manner at a speed that has never been done before. So I spoke to one of the banks, and they said that they were able to launch some of these digital portals for lending in a matter of weeks. If before COVID, it would have been thought to be impossible. So a lot of these efforts were focused on that whole origination and onboarding journey. As you can see from this 6 stages of customer life cycle here on this slide, the first 3 stages, discover, explore, and buy, they align with that origination piece. So in the discover stage, how well and do you have the digital tools and capabilities to help your prospects discover your brand if they haven't thought about your brand before. And then when it comes to the explore stage, when they want to compare and contrast the products and services that you have with your competitors, do you have these comparison tools, or do you have very transparent product information for them where they can easily understand the product details and whether or not it's suitable for them when they compare these products. And then when it comes to the buy stage, when they realize that, okay, this is the product they want to go with and they want to purchase these loans from you, can these customers actually apply for these loans digitally, and can you enable that to happen? So many of these transformation efforts have been concentrated on these first 3 stages. The last 3 stages, the U stage, aligns with the onboarding journey. So once they become customers of yours, do you show them what sort of digital services they can get access to? How do they make these loan repayments? Do you have the capabilities on these digital portals to help them do that? And then at the ask stage, when they have an issue or if they have a question, how do they reach out to you? Can they do so in an easy manner? The engage stage looks at all the insights that you have, where you can personalize and contextualize experiences for them. So come tax time, are you able to help them with sorting out their business taxes for the year? Do you also integrate with some of the third-party providers when it comes to payroll, or when it comes to different other types of business apps to make your services more valuable for some of these small business borrowers? An example of a bank that has transformed their origination and onboarding process is ANZ Bank in Australia, where they launched a new online lending platform to provide small businesses with conditional approval of up to $200,000 in unsecured lending in just as little as 20 minutes. What the bank did was they applied service design to visualize relationships between their customers and their employees, and to look at digital and human touch points, service and design, to look at the most ideal experience that's built around the bank's capabilities. The platform was also developed syncing with some of the accounting software providers like Xero and MYOB, where small businesses can upload their P&L statements or their revenue numbers in real time. Another example is Regional Australia Bank. With their partnership with Basic, they use open banking data to look at the current state of an applicant's financial situation. So that is all the transactions they have, where it's categorized, all the assets and liabilities using account aggregation, so that they can have a better holistic view of whether or not these particular applicant can afford a certain personal loan that they have applied for. And fintech firms have made tremendous steps and made a lot of innovations when it comes to the automation of processes for looking at credit worthiness. So this is an example of Oak North that is able to look at the credit risk of companies on a very granular level, not just at the sector level, but at the individual company level, because they believe that, you know, even if you're in the retail space, it really depends on what sort of business you're in, where your company is based, what sort of foot traffic that you experience every day, before they can assess whether or not that particular company is to assess the level of credit worthiness of that particular company. So what this alternative lender has done, or alternative fintech company has done, is that they have looked at credit models for about 1,600 subsectors and come up with 180 subsector specific COVID stress scenarios. So they are able to make correlations to the extent that any movements in the South Korean won will have an impact on certain industries and certain sectors or companies. So knowing that your customers are changing, your competitors have already embarked on their transformation journey, how can your firm reinvent lending, and where do you actually start? So you need to leverage the customer life cycle. If you remember the 6 stages of the customer life cycle, that's where you can transform the customer-facing interactions. You need to also transform your internal processes. What you see here is the lending value chain, and it shows the various stages of this lending value chain, all the way from the marketing, starting from marketing, where you improve the visibility of your brand using various MarTech tools, for instance, SEO tools to ensure discoverability. And you at the pre-sale stage, you need to also understand, how do you then provide product information in a transparent way so that it's easy for your customers to compare and contrast. And then when it comes to the origination stage, do you capture and extract data from any documents that your applicants are uploading using ACR technologies or AI-infused RPA, for instance? And then when it comes to the onboarding stage, do you also create digital signups for them? Are there visual aids for them to look at where these digital services are if they were to use it? And the monitoring and service stage is no longer enough for you to interact and engage with your customers and on a quarterly basis or month-on-month basis. You need to ensure that there is real-time monitoring of your loan portfolio so that you don't just contact the customer after they have been late on their repayments for 6 months, for instance, or 3 months. You need to do it real time, and you need to flag any instances or probability of default and have that conversation early on with that customer before they actually default on their loans. And then lastly, the collections piece. We call it the debt management piece because you might also need to look at flexible repayment terms if it so happens that a particular customer has defaulted on their loan. Considering their financial situation, what is the best approach going forward? And based on that, build a technology stack that will then boost customer experience, increase operational efficiency and growth while reducing credit risk. So these are a number of variety of technologies that we have mapped out that are going to be essential and important as you look at your transformation effort and your journey. Automation technologies like computer vision or OCR or facial recognition, looking at click-to-call services, so on and so forth. And we have done our banking technology outlook. And these are the 3 buckets of technologies that you see here where banking executives will be investing their money in. So on the left side, which is what we call the hot technologies, these are high priorities or top priorities, reflecting both interest and planned spend in the coming 12 months. So these are technologies like AI, ML, computer vision, APIs, microservices, for instance. On the radar technologies, so those technologies that are in the middle bucket, they are the initiatives that banking executives are piloting or are using them for very specific use cases. And these are technologies like AI-powered RPA. I did talk about low-code platforms which are some of the platforms that banks have experimented with over COVID in order to launch apps very quickly, in order to respond much quicker to some of these business changes or customer demands. And then those in the hype category, like edge computing or Internet of Things or quantum computing. So these are the initiatives that we believe create a lot of buzz, but still lack real interest or real budgets being allocated to them. And how do you then keep ahead of the evolving lending landscape? And there are some changes that lenders will need to embrace. And I leave you with these number of changes that you need to think about as you go on your lending transformation. So the first change that you will have to make as a lender and as you think about your transformation journey is that you cannot just think about focusing on building your own digital assets to acquire customers. You need to think about expanding your reach through existing marketplaces or ecosystems and connecting to partners in adjacent areas. I talked about the example of Goldman Sachs partnering with Amazon to provide credit lines for small businesses that sell on the marketplace. And we've seen the surge in demand and the traffic going to loan marketplaces. So you need to embed yourselves in those type of ecosystems so that you are visible to the prospects out there, or any potential applicants who want to take out a loan from you. And the second is that you need to start to use open banking. So real-time data specifically will be the key to how you win, serve, and retain these customers. So with open banking, for instance, Rabobank with its Funder Banking as a Service platform uses open banking technologies and AI to determine a borrower's credit worthiness in seconds, and it's able to approve a loan in 15 minutes. So with Rabobank, they don't just use this platform for themselves, but they also can use the platform as a white label solution to other providers that might want to get access to the bank's capabilities. And the third is to constantly monitor your loan portfolio and design ways to get early warning signals before at-risk loans actually become non-performing. So you want to reduce your non-performing loans and the risk of them becoming non-performing. So UOB Bank in Singapore, for instance, continuously monitors its portfolio using multiple data sources, including credit bureau data, financial data, patterns in transaction volumes, and it will raise a red flag if they see any signs of distress. So have that conversation early on with your customers before it becomes too late. And the fourth one is to use automation across the lending value chain. So over the pandemic period, many lenders have really struggled to manage a surge in customer service requests, especially those that are specific to loan concessions or restructurings or fee waivers and deferrals. So some have actually partnered with digital decisioning platforms to triage some of the customer requests so that they can bump up those that they see to be more needy of a customer service rep to have that kind of conversation. And lastly, to evaluate behavioral approaches and patterns to craft the best approach. So when dealing with those that have fallen behind their payments, you need to understand their willingness and propensity to pay. And you need to understand their behavior to use emerging technologies like behavioral AI to provide a way to optimize the collections process. So each borrower's situation will be quite different, and you need to craft a very different approach when it comes to debt management or the collections piece. So thank you. I hope you found the session insightful, and I leave you with some of the key takeaways. Before now, I will just pass it back on, and Jayant will take you through the next few sessions.
Thank you, Zhi, and that was a very insightful session. And now it is over to you, Jayant.
Thank you, Ruchika. Thank you, Zhi, for sharing insights around new age technology. I must say, 2020 has been an extraordinary year of facing, learning, and adapting to the unknown. Pandemic turbocharged digital adoption across products and demographic segments, which was never realized earlier due to customer reluctance and lack of attractive, intelligent digital solution. We see leading banks across the globes are turning to digital transformation to enable real-time monitoring and effective mining of transaction data while automating the feeding of results into decision making. We see new approaches are emerging quickly, not only for underwriting and monitoring, but also for customer assistance and loss mitigation. Today, I'm going to cover Newgen's product offering in banking space, including underlying tech stack. We'll talk around enterprise need from IT, from business and CIO perspective, around retail commercial lending accelerator construct, digital journey, and success story. To start with, onboarding technologies, we offer customer onboarding and digital account opening solution, which has capability of video interaction with online liveliness check. Banks can complete their product offering journey with customer onboarding through a mobile or a portal or through branch. The application is simple, easy to navigate with inbuilt ID verification, having clear and clean visual design, workflow streamlined with visual progress bar, online help through chatbots, inbuilt error avoidance recovery notification. Under origination technologies, we have loan origination offering for retail customers, small business, and commercial loan as offering with dedicated portal and mobile journeys to onboard customer. Further, we have offering related to servicing and monitoring like loan management system, which is a transactional system, and collection system for delinquency management and follow-up. All these offerings are built on flexible framework comprising of document management system, which helps to digitize content and enable digital operation, intelligent business process management, which comes with drag and drop workflow, and user form designer, create any business flow diagram with ease. Workflow configurator uses a way to capture and edit data entered by user along the process. This tool also gives flexibility to configure entire process, including handling rejection and exceptions at any point. Then we have customer communication management, which basically manage and track content and trigger communication on demand. A very important piece, that is the business rule management, enable banks to easily define, deploy, monitor, and maintain new regulations, procedure, policies, market opportunities, and workflows. One of the main advantage of business rule is that they can be written by business analysts and without the need of IT resources. Rules can be stored in central repository and can be accessed across the enterprise. Rule can be specific to a context, geography, region, a customer, or a process. We have activity monitoring report, that is business activity monitoring, which help product managers to gain insight via different matrices. We have RPA, which is applied to simple but repetitive and time-consuming process, helps to read and compile data, pull from multiple sources, system data verification versus document or source file data, processing transaction that follows structure rule. Analytics, it comes with inbuilt analytical engine comprising of decision tree, association of rule, logistic regression, clustering. This engine is used to do data analysis and credit decisioning, including application and lead scoring. Now I will take you through Newgen banking offering. The first is the account opening, whose brief I have already covered in my first slide. Then we have loan origination, both on retail and commercial side of business, which we are going to cover today in detail. We have loan management system, which is a transaction system with built-in accounting. Here, typical functions like interest accrual, receipts payment, rescheduling, provisionings are done, account closure, and PDC management. Then we have collections, which is basically a debt management solution where delinquency follow-up is being made. Then we have trade solution, which support both import and export side of the business, payment solution, which takes care of check truncation, SWIFT payments. Then we have compliance systems, which relate to FATCA and CRS compliant, and related service request management for customer feedback and management. Now, what do enterprise need from IT, a business perspective? One of the key questions which business always look at towards IT is what kind of configurability is available to them into launch new product offering. How can they create customer and business journey really simple without writing a piece of code? How can solution help in credit decisioning with accuracy by taking data from multiple sources? How can solution adapt to new circumstances and trends in consumer behavior? The answer lies in the framework and the accelerator construct. The solution comes with the multi-layered product processor, which acts as a bridge between business user and customers. The business user can define the structure of product from ground up without depending on technical person. You can define workflow through drag and drop capability, define structure of field, inform to flow. Everything can be configured, complete loan journey from customer acquisition to disbursement. The solution comes with pre-built integration library, workflow modeler, UX designer, and smart decision engine. Now, what do enterprise need from IT? A CIO perspective, an IT stack which is truly digitized to give business value through configurability and differentiated customer experience, a solution which can seamlessly coexist with existing heterogeneous IT landscape of bank and ecosystem, system compliant to lay down standards of data exchange, a locally cloud-based deployment for secure remote access. The Newgen Solution Accelerator comes with digital experience layer, which provides the flexibility to customize the visual UI based on requirement. It significantly reduces time required for front-end changes and simplifies making field level changes directly from workflow. Once a theme is selected, user can just drag and drop the field to create new form with validation. Some of the key components in rendering engine include forms, component, buttons, contextual, color, scheme, stable. Accelerator has one important thing which I want to talk around. The accelerator has service orchestration, which is a process of collaborating with two or more applications packaged as microservice to automate a process or synchronize data in real time. This can be established by configuring their connection with workflow that would enhance speed of credit processing and thus shrink turnaround time. Newgen collaborates extensively with global service providers for eKYC, ID verification and address verification, credit bureau and fraud checks, and specific services like property valuation can be done. And we are, right now exploring LIXI standards for data exchange. All our offerings are available locally over cloud. Now I move to accelerator functional map. This is a generic depiction of loan origination for multiple lines of business like personal loans, auto loans, mortgages, and show stages in loan processing. A loan application can originate from any of the channels like portal, broker, mobile, email, branch walk-in, or through even WhatsApp. It gets internally processed through different stages of credit assessment like application processing, underwriting, approval, documentation, closing, and disbursement. System is integrated to third-party service providers like Addressify for address verification, Wix Verify for ID verification, Core Logic for valuation, comes with bot-based operations and analytics. Now I would like to take you to Newgen's RPA and analytics offering. RPA is all about assigning a software robot to perform any work that is rule-based, workflow-driven, and repeatable. Most importantly, the software robot can interact with different IT systems at GUI level without any need of system integration. The key lies in identifying the work process, which are repeatable, definable, and rule-based. We see in mortgage industry quite a lot of processes which are there, and they need to interact with many people. Processes like underwriters, appraisers, valuers, employment verification. Numerous routine processes can be subject to RPA, resulting in improved efficiency and reduced costs. Bots can assist in data entry by giving different websites to fetch relevant documents, take out relevant information, which can be further processed in the system. Example like adverse media check or a credit check. Using chatbots and social sensing tools, bank can quickly respond to customer queries online and manage social interaction. This can minimize the need of customers to visit a physical branch, ensuring safety of both customers and employees, especially during these times of social distancing. RPA can also optimize the bank's contact center operations by analyzing their customer database and dynamically routing calls based on their past interaction. RPA supported with AI and machine learning can detect fraud more efficiently based on customers' past transaction. It can sense suspicious activity, generate email notification, and push messages right away, thereby safeguarding customers' data and asset. Now I talk around analytics. Newgen framework comes with an embedded analytical engine. It helps businesses to do sentiment analysis. Using AI and natural language processing, it analyzes available content from different interaction channels and classify intent of customer in different classes. Example, complaints, requests, lead, etc., and support business to effectively route and resolve them. Platform is language agnostic with ready-to-use ML model. The system has data mining workbench to enable banks to enable obvious data pattern and not so obvious data patterns, and can be used to do credit scoring, portfolio segmentation, personalization in offering, supporting computation of probability of default and loss at given default, and helps in calibration of risk weight in the scorecard model building. Now, this is the slide. What you are looking at is actually the digital lending journey. The most important part is how digital lending journey looks like. I've already defined the building blocks and tools. The right mix of these define a simple agile digital journey with strong credit assessment. The journey starts with self-service portal where a borrower does data entry and upload his driving license or passport or any other ID proof. System automatically sends the uploaded document and extract data from it into application. The ID data gets verified through third-party service providers. Further, data aggregation happens around customer income details and pre-eligibility checks get fired in the background. Basis eligibility computation and inbuilt scoring and approval and disbursement is done by the system without human intervention. Normally, in case of mortgages where loan amount is large, system can be configured to give in principle approval through straight-through processing mode. Any case of discrepancy and exceptions are handled through case referral stage where automated alerts can be triggered to take up the action. Now, this journey, which I am right now showing, is through a broker portal. The customer connects the broker for a mortgage loan. The broker submits the application on the broker system, that's NextGen. Application gets further processed through broker system and move either directly to lender's system or through a middleware. Status updates are sent from lender system to broker system through back channel. Now, this is the journey which I am showing is of the retail loan origination suite, and it has some flavor of mortgages involved into it. If you see on the top, there are what we have shown is the integration layers with different service providers. 1, 2, 3, 4, and 5. If you talk about this is the journey which we are taking, and what activities you can do are written in the underneath. The journey starts with the lead initiation, followed by customer onboarding, customer verification, credit checks, request capture. All these stages are linked to third-party service providers for validating data. For example, under customer onboarding, information is fetched from unique ID of customer like TFN, DL, Medicare. Documents get auto-classified using digital sensing and data gets extracted and ingested in the placeholder. Customer ID and address income details are verified through services of third-party information providers like Frollo, Addressify. Under credit checks, credit reports are received through external credit bureaus like Equifax, Experian. System comes with inbuilt capability of video interaction with liveness check to establish borrower's guarantor. Under request of specific products like redraw, offset package, loans are chosen. Type of interest like fixed, variable, split can be selected. Tentative repayment can be drawn. An add-on offering like payment protection, rate cap, etc. can also be chosen. Under the credit analysis and approval, collateral assessment is the first stage where information related to collateral valuation, rating are obtained through third-party service providers like CoreLogic, Velocity. Under serviceability analysis, different calculations are done like minimum expense calculation as per HEM, serviceability calculator, stress testing scenario, automated risk scoring, risk-based pricing, rent assessment, investment cash flow calculator, and gearing calculation. Integration with third-party bureaus like Equifax and Experian. This is followed by exemptions and transaction management, all terms and condition management, all exemptions based on credit policy, property expenses, and sources of fund. Rerouting of exemptions and approvals, stipulating necessary terms and condition can also be updated manually here. Sanction and offer, under this offer generation and offer negotiation happens. Then we have document and disbursement here, document configuration, charge creation, linkages, and final account creation is done in code. System integrates with core platforms like T24, TCS Bank, Finacle, OnBase for DMS, and DocuSign for e-signature. Now I move to the, now what you see out over here is the LIXI standard. We are right now looking at LIXI toward adopting LIXI standards within our framework, and we are analyzing the data models which have been part of the LIXI standards. Now I move to the accelerator functional map. This is the generic depiction of loan origination for commercial lending. The journey largely remains the same. However, information capture is done for borrowing entity, related party, classification or segment of borrowers based on employee turnover, different assessment models and scorecard for micro and small businesses, pre-configured templates to capture financials, having inbuilt bank statement analysis and business activity statement, having inbuilt covenant module, document and disbursement. Now we'll talk something around Newgen. We are a 27-plus-year-old company with 560 plus of active customers, with 3,000 plus of employees, 16% partner revenue driven. We are there in 69 countries with 44 patent filing. This is our global footprint. We have offices across globe like US, UK, Dubai, Australia, Singapore, and headquarters is based out of Delhi. So these are some global footprint related to banking and other companies, other verticals like Hudson Valley, Ocean Bank, who have taken our solution. Then on the success story part, I would like to talk around the low-code rapid development of application for SBA Paycheck Protection Program. If I go with the timeline, the CARES Act was passed on March 27, and we formed within Newgen, we formed an internal task force. By 1st of April, creation of PPP LOS beta release was done. So it's a matter of 3 to 4 days, we came up with the solution. And by 3rd April, application acceptance for small business also started. By then, we had done successfully integration with eTran, which was must to have kind of requirement. By 24 April, we had onboarded 25 plus institution. Further, the solution was enhanced to give forgiveness. So this talks of our low-code platform and our agility. I'd like to talk about one of the global captive auto finance company also who wanted to do digital onboarding, easy, simple, and transparent process to apply, enhance customer experience, introduce dealer sourcing model, enable organization. We provided with them broker portal to initiate loans and give quotes on the go. It has mobile-based onboarding, credit assessment for retail loans, fleet finance, luxury finance, and value-added products. And key value what we delivered was reduced turnaround time, better customer experience, decrease in IT maintenance cost, decrease in operational cost, and unification of critical processes to parent processes. Thank you all. I hope you would have enjoyed this session. Over to you, Ruchika. Thank you.
Thank you, Jayant sir, for all the insights, and thank you, Z, for sharing a detailed presentation as in what is the current impact on everyone. Now let's move on to the question answer session. I have the first question for you, Jayant, and the question goes, in what all spheres Newgen's solution use AI, ML, and RPA?
So, Ruchika, I had explained this in my presentation, but I'll again come back. So, and I'll give a very concise answer. This is, we are using AI in sentiment analysis. We are using contextual analytics. Then we are using intelligent OCR to extract data and ingest in the system, and also identifying different kinds of documents versus passport or a DL. And we are extensively utilizing AI in the credit scoring part, where we automate certain set of business rules, and we also do certain self-learning, and there is association and the customer segment, which we look at through the AI part. From RPA, I would say that we are using RPA for intelligent query handling, data entry and fraud assessment. Data entry for the routine task, and it depends on the kind of process we are using. If the process has multiple stakeholders involved and multiple websites from data which needs to be there we use our RPA offering.
Thank you. And the second question is, can you emphasize on one key USP that Newgen solution has in compared to the market?
I would say Newgen platform is a flexible platform. The USP lies in the underlying framework, which I covered in the beginning, and where I was talking about business rule management, intelligent workflow, and the flexibility lies in the configurability of the platform. The platform is a low-code platform where you can write down business rules in business rule management, and it gives you a very strong workflow, and integration adapters to connect with ever-evolving ecospace. So I would say configurability is the key, and it has also a very, dedicated product management or a product processor where you can define, design your own product offerings and take them to market. So I would say configurability part in terms of the underlying framework, configurability in terms of accelerator product construct, and the third part is the low code. Low code is that you can write things on through the BRMS.
Thank you. Next question is for you, Zhi. If you could hear me clearly.
Yep, I can hear you.
Okay. So can you suggest 3 steps that any organization should do to combat the COVID-19 impact on lending?
Thank you. Yeah, I can. So I think, through my presentation, I kind of talked about how consumers are evolving and how businesses are evolving and how the borrowers' attitudes and behaviors are going to evolve. So I think it's very important to first, understand what some of these changes are, how they want to interact with you, whether it's through digital forms or through a combination of hybrid experiences. If they are borrowing through their brokers, for instance, you will have to also integrate those types of experiences as part of your transformation effort. So I think the first thing is to look from that consumer point of view. And then the second step is to look at your internal processes, all the way from marketing and pre-sales to, the sales journey, the origination and onboarding journey, all the way through to debt management or collections. So what are some of the internal processes that you have currently? Where are the gaps? How do you then improve upon some of these gaps? And the way that you would do it is to look at, some of the technologies that can help you to improve efficiency or reduce some of the inefficiencies, or to improve some of the experiences involved. And then lastly is to look at what's happening out there. Specifically, what does the competitive landscape look like? Are there new players in the market? How are they doing distribution? How are they serving their current borrowers? And where are the areas where you would have to tap into ecosystems, or to look at different types of open APIs, for instance. So yeah, I think it's to look at your borrower journey, and then to look at your internal processes, and to always keep yourself up to date with what's happening in your competitive landscape.
Thanks, Zhi. Thank you both of you for all the insights that you guys have shared on future proofing the digital lending. I thank all the entire audience for spending your time with us. We shall be sending across the presentation and the transcripts to you guys. So goodbye and have a good day. Thank you.